The market staged a pretty sizable rally after opening up at recent lows at 585, similar to what we saw yesterday. We opened up at 585 and rallied. Same thing today, back up into the 590 level, closing just above 590 today on the SPY. The largest gamma exposure concentration is at the 600 strike. We've been watching this for a number of weeks now, and it looks like we're starting to find some footing. We've been, kind of highlighting the importance of this 585 level. We need to hold this level, as this has been a major resistance level from back in October multiple times, as well as recent support. And we've seen that yesterday morning and this morning. So pretty happy with the market action today, bouncing off of that level again. And this 600 strike is really now starting to come into view here. If we can get a little bit more momentum going in the market, this 600 strike is going to have a very strong magnetic pull on the price action as gamma effects really take hold and pull it up back to recent highs. So even though it looked a little precarious this morning when we opened up, we are now firmly above the 0 GEX level and in positive gamma exposure territory, and that looks good for bulls heading into tomorrow.
Anthony, one thing we've been talking about the last week or so really is the VIX and the VIX expiration coming up tomorrow morning. I have the chart pulled up here, and you can see today we perfectly bounced off of the 0 gamma level for the VIX, which was 18. And so it kind of left this long tail above the candle for where we closed at 1634. We actually have a little bit of a shift here to where now the biggest negative cluster is at 16. I'll zoom out a little bit so you can see the number there. So this is a slight shift going into tomorrow's VIX expiration. I'll also point out that we had a lot of volume at 20 today, which is a smaller gamma cluster, but it's interesting that we had so much volume there relative to other strikes today. This all fit pretty well within what gamma told us would happen with the VIX. And of course, once we get past tomorrow morning pre-market, most of this won't matter. It's going to be kind of a wide open field again as all of this gamma rolls off, and we can see how market participants start to hedge and position themselves with the VIX going forward.
Thanks, Sean. Let's head over to the IWM. This is actually highlighting the 3 largest net GEX levels to the upside and the 3 largest net GEX levels to the downside. And I like to look at this view sometimes to have a clean picture at important levels as far as gamma exposure is concerned. And you can see here on the downside, this is what really constitutes a dealer cluster. We've got 2 strike prices here at the 225 and 226 level where negative gamma exposure is concentrated, and you can see we opened right above that concentration zone and bounced immediately off of that. And it's interesting how this works out. If we just go back to pre-election, this was, of course, major level to the upside. This was resistance here at a couple of points. And so that's why these gamma exposure levels are so important in the options market, because they translate to real support in resistance level based on open interest in the options market. And so I'm really interested to see how IWM responds in the coming days, if it can sustain this momentum and continue higher. We've got a long runway to go ahead of us. You can see between 240 and 250, and these levels will start to become more impactful as momentum builds to the upside. And just coming back here to our standard view, the purple bars represent GEX, while the blue bars represent volume. This is option volume buy strike price for today. And look at all the volume that came in at the 230 strike. Most of that volume, of course, was coming in throughout the day, but as you can see, we were trading as low as the 226.5 level. And this is very bullish in my opinion with all the volume coming in here at the 230 strike. It's really a magnet at this level, bringing price up on an intraday basis and coming into this crucial 0 gamma level here, highlighted by this blue line. So I think we're at an interesting point. Today was a big day for small caps, and so we're going to see if momentum can continue tomorrow and into Thursday.
All right, Anthony, I wanted to go over Freeport McMoran, FCX. And it's interesting. I mean, we've been in a downtrend going back to late September. I guess what's catching my attention is just today, we basically regained the whole moving average at 43.27. We closed at 44, which you can see here. And to me, closing above the whole moving average is a signal to go long. So I start looking at next resistance levels, and technically that would be either 46 or potentially 49. But to give me the edge in terms of which of those might be more relevant, I'm going to take a look at gamma. You can see we have positive gamma with a big gamma cluster here at 50. And today we had volume at 45. We also had some volume at 40, but based on regaining that whole moving average, I'm giving the edge here to the positive side with maybe reaching that top Keltner channel around 49. That matches pretty closely to this 50 GEX level. So Freeport McMoran looks pretty good. Maybe if we get the dollar weakening a little, that'll cause metals to rally and that'll drag Freeport McMoran up with it.
Yeah, FCX is definitely one to watch. Next, I just want to take a look at NVIDIA. NVIDIA's got big earnings coming up, I think tomorrow night. You can see for the last several weeks, we've really just been bouncing around between the 0 GEX level down here and the dealer cluster zone down here, really not going anywhere. Just trading in between the 135 and 150 zone, which is quite a large range, of course, for a $150 stock. The 150 strike has been a very important level for NVIDIA. We've tagged it several times, or at least attempted to tag it multiple times just in the last week. Largest gamma exposure concentration and as well as volume. You can see nearly 200,000 option contracts traded at the 150 strike today. Likewise, over 150,000 contracts traded at the 160 strike, so all the way up here. So I think this is speculation. Market participants believing NVIDIA is going to beat analyst expectations and have a blowout quarter. Wouldn't be surprising if they did. We typically like to stay away from earnings plays when it comes to option strategies, but market participants tend to be focusing on the 160 strike and the 150 strike. So there's a number of different strategies you could play in the options market to play for either an upside blowout to the 160 level or potentially selling premium above 160. Assuming that is going to be a ceiling. So that's a couple of interesting ways to play it. Again, we typically stay away from the earnings plays because we don't have a truly defined edge in the options market when it comes to earnings volatility. But it is interesting to see how market participants are focused on these two major strikes. So we'll definitely be watching NVIDIA tomorrow and into Thursday. As a reminder, you can check out our gamma exposure dashboard and our option flow analytics tools by heading over to geeksoffinance.com. You can sign up and become a member. I'll put a link in the description below. You can also access our community Discord. We have a number of both free and members only channels where we discuss a number of trade ideas, market analysis throughout the trading session. I'll put a link in the description below for that as well. We'd love to see you join us. Thanks so much, everybody, for watching, and we'll see you guys in the next video.